Hello traders, Gary Wagner here. It is 12:30 in Honolulu, 6:30 in New York on Friday. Happy Aloha Friday, as we say on the island. It is the 16th day of May, 2025, and this is the evening report for gold and silver, our weekend review. Gold futures have experienced an extraordinary retreat since May 7th, declining by $242 after opening at $448 on May the 7th and closing today at $3,205. This the result of economic reports and trade agreements dramatically reshaping market sentiment. And the time period I'm addressing is the last 8 consecutive trading days, beginning on Wednesday, May the 7th, with gold dropping $70, followed by a $62 drop, and then on Friday, gaining $18. This week, gold dropped by $87, gained $12, dropped $73, regained $63, and finally closed $38 lower today at $3,205. In fact, over these last 8 trading days, gold faced persistent pressure as market participants increasingly embraced U.S. equities during this week and last week focused on diminishing international trade tensions as both the United Kingdom and China came to an agreement. The total decline over the last 8 trading days has been $242. So the question becomes, what will gold do next week? Will it find support at current pricing and move higher, or continue its slow and methodical price decline? First, if gold is able to find support, and the one thing that we can say is that the lows that occurred at the end of this week, the closing price on Wednesday and opening price on Thursday, occurred at the 61.8% Fibonacci retracement, which is considered a deep but acceptable correction in a bull market that has moved up substantially in the case of this last rally from 2,973 to the all-time record high above 3,500, and then trading lower by 61.8%. If that happened and gold found support, the most logical price points to look at for gold moving higher would be first at $3,343. That is based on this closing price of May 5th, with strong resistance at $3,448, the opening price of gold on Wednesday, May the 7th, the first of the 8 trading days that resulted in a deep and defined correction of $242. If gold in fact continues to trade lower, what would be strategies and viable price points to look at? First, gold could decline to as low as about 3,090 to maybe even 3,050 and still be considered an extremely deep but acceptable price point that gold corrected to after this defined rally. A break, however, below this low here at $2,975 would be significant. It would be an indication of major technical chart damage, and in fact, we would have to look at it as no longer a correction, but rather a pivot after gold traded to an all-time record high on April 22nd and the opening price of $3,450 on May the 7th as the conclusion of a bull market, because it would give us a strong indication that market sentiment had turned from bullish to bearish on a short-term basis, and that would be an entirely different ballgame. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.